Hello, my friends. Today we're going to be going over gaps. Learning to master the gap is one of the most important things in trading. Um, is it going to gap too far from your entry point? Is it going to gap to your entry? Is it going to gap below your entry? All these things are going to be discussed here in this video. All right. Well, I hope it helps you out. Um, all you can do for gaps is just keep on learning from experience. Gaps are nothing but experience. All right, let's get to it. Enjoy the video. Okay, so usually what I like to do is I like to have, let's say, we'll use the green for our green line here. And in this example, I'm going to go ahead and show you going short. Okay, so just pretend like those are straight. Target. Okay, so we have our buy here, sell here, target there. Most time what I like to do is have it where price is trading in here. Of course, it has to trade inside the range. But when the next day opens, I like to have it like gap close to open and then momentum through the trade. Okay, so just write that down. It really should only be affected on the 5-minute chart, but sometimes on the 60-minute chart, it gaps really big as well. Um, so I like it to gap close to entry and then momentum through the entry, through the trade. What's going to happen today is it's going to gap below entry. Okay, so it's going to gap. Sorry about that. That was my IB. I don't have my charts up right now, just this. Right now it's going to open up below. It's going to gap down below. Let me erase this so you don't get confused. Right now it was here inside our range. Now it's going to gap down below. Okay. It has a long way to go, but it has a couple areas of resistance. It has a couple areas of resistance here and then another one here. But it has a long way to go down. Opportunity, actually. It has the opportunity to go a long way down. I don't like to make grounded statements. Um, since it's going to gap down below our entry, it's always a scary time to get in because it could, if your entry's here, your stop most likely is up here at the last 5 BP, which this distance is not that bad from your entry to your stop. However, now entry's way down here, so now your stop is bigger because you still need to have your stop at the same place. Just because it's going to gap doesn't mean, okay, well, instead of having my stop here, I can just have it here. That's not right, because then it could easily just turn back around, come up close to where your stop should have been up here, and then come back down. So wherever your stop was planned at is where you need to keep it. Now, gaps are the hardest thing for me to deal with in trading ETFs. I was brought up and raised trading Forex, and we don't have to worry about the gaps except for Sunday when the market opens. So the gap, uh, learning to master the gap was a big learning curve. Slowly but surely you'll get there. Um, every day, even 3 months ago, just studying the charts every day with the last group, uh, got me 1,000 times better than what I was at, than where I was. And that's the way you should be. Every month you should be 1,000 times better than where you were. So anyway, this is going to gap down below your entry. These are always scary because you don't know, okay, if you buy here, if you sell here to go short, it could easily just start come back up and then hit your stop way up here and then you're dead in the water. Um, that's why I said I usually like it to gap down close to entry and then go through because you can see it momentum go through, but in this case it's not going to. Usually if it does gap down below entry, I'll use reward risk ratio to be the deciding factor. And in this case, just using this example right here with our stop here, entry here, oh, entry, with our stop up here, target down here, it's 2 to 1. It may or may not be worth it because it could easily just stop right there and turn around. You're automatically in a loss. Now, the bad thing is if it turns up like this and comes back down, you can't really enter here now. Okay? It's already stopped here once. I mean, you could enter here, but then you have to worry about stopping here again. So, and this is really the new entry, so therefore when it comes back around, you can't enter here. You should really wait till this new one. But the good thing is if it comes up and back down, most likely you're going to have a tighter stop in this area, which will be a good place to place your stops. Therefore, you have a better reward risk ratio if it comes back down. If it comes down once, comes back up, and then comes back the second time, usually the second time it will be for real. Now, it still may stop at any time, but it should keep going at least past your entry. So, uh, I just wanted to go over that before we start here because the learning to master the gap is probably the most important thing about day trading the ETFs. I'm going to turn my camera off for a second and get my charts back up.
As I said before, just learn from experience. The more chart hours you spend learning how to trade, the better off you're going to be. Never stop educating yourself. Um, that's the biggest thing I can tell you. Just keep learning, learn the right way to trade, learn a good system, learn money management, learn good philosophy, and you'll be well on your way to trading success. All right, this is John with FusionTradingLive.com. For more information, just go to our website. We have a lot more free videos to check out. I'll see you in the trading room.